What is good, my people? It's your boy, Denzel FX, and obviously, from reading the title of this video, you want to know how to flip a small account. So, what I'm going to do today is I'm going to explain how I flipped a small account from 15 euro all the way to 200 euro. The steps that I had taken with my trades here. I'm going to show you a few screenshots, a few screen recordings too of the Euro JPY and CAD Swiss that managed to double and even almost triple my account. Okay, so from there, I will actually show you and break down the trades that I had taken and why I actually took those trades. So, but before I do that, I need to explain a few things. Before you even try flip your account, you need to understand the main thing is you need to have a fair knowledge and a fair understanding of what's actually going on in the market. There's no point of you topping up a small amount of 10, 20, 50, it doesn't matter if the amount is small and you have no idea on what's actually happening on the charts. You're just going to give your money back into the charts because you have no clue. So the main thing you need is a fair understanding of the knowledge in the markets and what's really happening. You need to be able to identify an uptrend, downtrend, or a range. You need to also be able to understand the market phase. Is the market phase impulsive or is it corrective? These are just background things you need to do before you even press that buy or sell button. Okay, that's one thing. The second thing is the aim of the game is to grow the account, not blow the account. So your psychology has to be A1. That's another thing. So your psychology has to be A1 that you understand even though you make a loss, it's not going to burn your account or anything like that. You take a step away, you come back, you look for a better entry. Okay. Third thing we need to understand is when you're flipping an account, try look for one pair or even two pairs to trade because all you need is one good setup on a higher time frame and you just enter from there and you just ride it all the way down to your take profit. And obviously on the way down to your take profit you will be able to stack your entries, enter. Like I will show you a few screenshots of me entering and violating Euro JPY. That's another thing. The next thing is you need to be able to actually hold your trades. Everybody's trading style is different, but for me, when I was flipping this account, I had to understand the rules that I had set for this account is I will be holding my trades in the span of a week or maybe even 2 weeks, okay? So with that being said, the next thing you need to understand or the next thing you need to do is only look for high probable setups. Once you do this, you'll understand that if you see a setup because it looks nice, don't take it because the chances of that trade playing out will be very small because it's not a high probable setup. There's a difference between a trade that looks nice and a high probable setup. The difference is the result is you're either going to win or you're going to lose. And you'll lose if it's just a setup that looks nice. If it's a high probable setup, there's a 9 times out of 10 you're actually going to win that trade. Okay. And the final thing you need to do is you need to be able to trust your analysis. So that like before you even press buy or sell, you've already took the time out to actually analyze the chart. So your confidence has to be A1 because once you enter that trade, that's you showing that you actually trust your analysis. There's no point just because you're in a little bit of a drawdown, you now close your trade, then you step away from the charts, you come back and what happens? Your trade played out. You stepped up because you were afraid, basically, and because you didn't trust your analysis. And the final thing I need to say is when you're flipping an account, I highly recommend that you look at the higher time frames. Because when you look at the higher time frames, you fully understand what's really happening in the markets and you'll be able to find the perfect entry on the highest time frame, like I said here on the monthly. Then there you can take it all the way down. It might take a while to actually play out, but just knowing the fact that you got the best entry on the highest time frame possible, it makes things a lot easier for your psychology to understand that okay, this trade will take a week or two to play out, but you understand what's really happening. Okay, so yeah, I'm gonna break down Euro JPY, a simple trade that I had taken that managed to flip that account from 15 all the way to 200. Another thing is equity means nothing until your profits are locked in. So obviously I will show you screenshots of my equity, but at the end of the day, everything was closed because my target was actually reached. Right. So now we're going to take a look at Euro JPY. So first things first is that you need to understand the market phases. Is the market in the impulsive phase or the corrective phase? Are we ranging or are we in an uptrend, downtrend? These are little things that play in the background that you need to have on check before you even enter a trade. So I'm just going to break down here the Euro JPY trade. Right. So the first thing I had noticed was something like this. I'm going to take it all the way back to the naked chart. So yeah, first thing I had noticed here was simply price was in a clear downtrend, but it was moving very correctively. So we could say this was an impulsive phase and this is a corrective phase. What happens next was an impulse, but that's really nothing at the moment. What really matters is that price actually broke our descending trend line like so. So from there, we were able to see that now price is in a new uptrend. It's making higher highs and higher lows. Now it's made a new higher high. So when price has now made that new higher high, I understood that we are now going to be in the corrective phase of the market. So with that being said, I mark out my levels in the chart over here. So this green line will represent my buying level. It's not here at the moment, but I understand this is a potential direction of where the market will actually head to before it continues pushing up to maybe here. If it breaks, maybe here. And finally, this will be its last target. But at the moment, we're not there yet. We are still pushing to the downside, okay? So all the sales I had, so all the positions I had on Euro JPY was a sell, okay? So the next thing I do now is from understanding where the market is on the monthly time frame, that's all I needed to know, that I'm going to be looking for purely sells. Simple as that. So now I know that I'm looking for only sells in the market because of what I see on the monthly. Everything becomes a lot easier. I hop over to the line chart and I could see that we're clearly in the corrective phase. And over here, now what is clear to me is that price is making lower lows and lower highs. So over here, this is a nice lower high. This is the new lower low. Price came back to retrace here at that lower high level. But we're not going to look at that on the monthly. We're going to take that in the weekly time frame, okay? So here we are now on the weekly time frame, my people. What I do next is I draw my next trend line to actually show me the direction of the market. So now I know that the direction of the market is in a downtrend like so, okay? And I know where the market is heading to. The market at this moment in time has a high chance of it actually heading to that green line that I have drawn out, like so. So now I know if I hop onto the line chart, I'm expecting price to come to this level of supply and demand, okay? The next thing I need to do is just analyze this properly and see what's really happening. So what I could see at that moment in time before I got all my sell entries was a simple high probable setup. Price came all the way over here. That was our first touch. Then again, we have our second touch. And what we know about the market is on the third touch, price has a high probability of it pushing to whichever direction. And in this scenario, it has a high probability of pushing to the downside, my people. So from the monthly, we understood that price is going to be in a downtrend simply based on what we could see it's in the corrective phase. On the weekly, we have now spotted the fact that we are now on the third touch of our trend line. So as you can see, this is in the month of January, like so, which is the month we're in now. So we're only going to be looking for purely selling setups, my people. Next up, what we do or what I did was I jump into the daily time frame. Because with me, the best tip I can say when you're flipping the account, always look at the highest time frame. So now here we are on the daily time frame. Once I see price approach this level, what I had done, I just drew my fib from low to high. it had came to my golden zone of the 6180, like so, which is also in line with my trend line. So these points of confluences make me even 10 times more confident the price is going to fall into my direction, as you can see. So now we know that price is falling into your direction. The next thing you do is you just keep on entering. Enter at every possible break of structure or any possible point of retest, my people. So now from what I could see, my entry was all the way at the very, very top here on the 131 level, like you can see now. So all my entries were literally based on what I could see on the daily time frame. Next up, we hop into the 4-hour time frame to see what's really happening. So now in the 4-hour time frame, I'm going to get rid of these little fibs so everything is a lot clearer for everybody to see. I'll also get rid of this thing over here. Okay. So now in the 4-hour time frame, things are going to become a lot more cleaner for us to understand because we know what was really happening from the highest point, my people. Right. What I was seeing was a simple uptrend, like so. So now we see price was in a clear uptrend. When price came to our level of interest over here, everything is just purely based on price action. Over here was my first type of entry because he does some sort of double top. Double top was the reversal pattern, which is nice. So yeah, that was that there. As you can see, double top, first touch, second touch over here. That's when we had our first entry. Now that we have found our first entry, we can see price had actually broke our level of the trend line like so. The next thing we do, because we're now on a smaller time frame on the 4-hour, we just trade with the trend and we know that price was now in a clear downtrend, my people. So the next thing we do, or the next thing I did, was find my next entry at the break of structure. So here we could see price actually broke this level over here, making this level the new lower low, and this is the next lower high. So from understanding this, my next entries were all the way here. So I had more entries added up over here as price was pushing to the downside. Price then broke this level of structure here. It came back correctively to retest like so. Once it retested, you know what we do? We enter again because we're trying to flip this account. On a normal account, all we needed was maybe one entry like so and write it out all the way to take profit. But because we're flipping the account, we're going to try add all our entries once our equity is actually running in profit. So obviously for my first entry was up here, we are already in a little bit of profit. Price came back here. Our profits are still good, but they're not as high as it was from here. Next thing all we do, we add more entries over here. Price then drops again, moves correctively. More entries were added over here. Then price began to fall. So in total, we had a good few entries as you could see. But because price had actually, with this account over here, my targets were already reached. I wanted to flip it to over 200%. No need for me to be greedy. The minute I seen 200% was hit, what I had to do next was simply just close all my profits, which is very good because you need to pay yourself, my people. So that's that there with the trade breakdown on Euro JPY on how to flip a small account from this to this. Like I said, I will add a few screenshots and everything like that so you can actually see and understand what's really happening in the charts. So all you need to do, all you need to understand when you're doing these type of things, you need to have fair knowledge on what's actually happening in the charts. Once you understand that, everything becomes easier. The next thing is you need to look at the higher time frames. Once you look at higher time frames, you will be able to understand where the market could be heading. I broke it down here from the monthly, weekly, daily, 4-hour on how clean that entry was and all my other entries that were added here on top of that to flip that account. So what you need to know is basically that once you have your direction in the market, it's very confirmed from what you've seen on the higher time frames. Enter, 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 enter at every breaker structure or every retest. So once you do that there, you're already running in profits with your equity. Then from there, you write it out. Whatever your target is, if it's hit, it's hit. Take all your profits, close the trades, and don't be greedy. Anyways, my people, I will leave it at that. This is a quick video. Let there be peace in the Middle East, and let my brothers and sisters be safe.